Good afternoon, traders. John Caruso coming to you here for the afternoon of May 17th with a quick look in on the markets. We did see some soft housing numbers come out this morning that gave markets a little bit of a jolt off the open. All in all, the S&P is trading about flat to lower right now. The NASDAQ, it looks like, is about to break into the red currently. And the Russell's still leading the way. On the upside, it's up about 0.4% right now. Taking a look at the 10-year yield, sitting at about 165. Not a lot of action in the bond market here lately. However, that strong reversal that we did see last week off of the CPI data, we do believe that we were calling maybe for a little bit of upside in the bond market. We think that that is likely not going to come to fruition now, and another retest of lower ground in the bond price and back to the upside, perhaps to 175, perhaps as high as 180. On the 10-year yield is likely in the cards over the next coming weeks. So keep that in mind. Taking a look at crude oil. Crude oil did have a sharp reversal off the morning highs. We traded as high as 67 and as low as 64.30, I believe, after some news broke that the U.S. and Iran are close to a nuclear arms deal. Right now, the market has since recovered off the lows. It's trading in the mid 65s. We think 65 is a crucial level for crude oil. Sustained trading action above 65. We still think $70 is certainly in the cards, and it could happen sooner than you think headed into the Memorial Day weekend. So keep that in mind. $70 is still the target, so long as we can sustain trade above 65. Natural gas. We've been very bullish on natural gas over the past several weeks. We've actually mentioned that several times through some of these videos. We did hit our upside target in nat gas yesterday. 310 to 320 was our sell zone for that long position that we had on, and we have significantly reduced that position via profit taking as well as raising stops on that position to lock in profits. Taking a look at the metals right now. Gold trading flat to higher. We did see a strong move in the metals markets last night. Gold on the upside, I think it reached as high as 1875. Silver got as high as approximately 28.85, I believe. We have seen the price in silver since come off. We still favor silver over gold at the present time. The chart's a little more positively configured. We think if you get dips back into the mid 27s in silver, they're great buying opportunities for a run back above $30 in coming weeks. We think that is a strong possibility. Gold, we mentioned 1850 to 1860 was going to be a sell zone. Well, we did stretch a little bit higher, 1875. Gold still has to prove itself above 1900 for us, for it to flip the chart bullish, and for us to get interested again in the long side of gold. So keep that in mind. Gold right now, we do think the probability still favors a trade back to 18 versus a push above 19. From this point, we also have the U.S. dollar registering immediate term oversold right now on the charts as well. So keep that in mind when you're trading the gold market. Still favor buying dips in silver much more so than gold. We do think gold is likely going to perform better in the back half of the year, but we still might have one more hurdle to jump over for the gold bulls going forward. So currently trading about 1867 on the charts right now. We still think a trade back to 18 is probable. So keep that in mind. Once again, I'm John Caruso. Feel free to reach out anytime. We'll see you back here probably towards the end of the week. Take care.